Hi guys and welcome to Topic Tuesday episode 23. Wow, I can't believe we're on episode 23. If you've been able to watch any of the previous episodes, then thank you so much. I'm super excited for today's episode. I'm actually excited for all my episodes, but I'd say so far out of all of the topics we've discussed, this one we had the most entries and questions in for, which makes total sense because it's such a real life thing that we all go through at some stage of our life. It's a subject that I think we lack a bit of knowledge on. We lack a bit of comfort around. It kind of scares us a little bit. It's always changing. And I think it's so great to have Dan with us today to help us, to educate us. We've got loads of good questions and queries. And just to bring light to the subject and hopefully make it a little less scary. Dan, you're actually the first male on the podcast.
First male?
Yeah, I haven't had a male guest yet. And the most...
That's an honour in itself, right?
Yeah, smartly dressed. He said, well, I thought I should dress like I'm a guy that works in finance, which I thought was funny. So thank you so much for coming. Dan's travelled from down south, so very much appreciate it. And actually, if you know Sydney, she's been on my podcast and she's a close friend. Sydney popped up on her story that, Dan, you've helped her lots with her kind of like mortgage and housing needs. And I thought to myself, if Sydney's recommended him, I know you're great. So thanks for that, Sid. And yes, thank you so much for coming.
Pleasure.
I really appreciate it. So first of all, let's jump into a little bit about you before we touch on the whole mortgage side. So sure. If you'd like introduce yourself and tell us a little bit about like what got you into the industry. Tell us the pros and cons. Tell us the things you love about your job and don't love about your job. Because I think maybe people will want to know it if they want to look to get into it in the future.
Yeah. I mean, I took the fairly typical path of going to uni. Done a very generic business degree, come out of there and started looking for jobs, and I ended up with a small job in a building society. So that was kind of my entry level into finance. I mean, I wouldn't say I was looking for a job in finance, but that's where I ended up. I didn't like that so much. I moved on to insurance. So that was home insurance, car insurance.
Yeah.
And then I got asked by a family member to join the firm I'm at now, and that's where I am. So I've been there for almost 10 years, and I started again in the insurance and then qualified as a mortgage broker 5 years ago in January.
Enjoy it?
Yeah, I mean, look, private client facing. So I enjoy my clients coming back to me. I like delivering on what I say I can do. The pros are, I mean, it's a career. I can support my family with it. I can grow with it. The cons are, we're employed. We like a little bit more flexibility, so there's a little bit of that. We all want to be paid more. There's always that. So no, it's a career and something I do enjoy.
That's good. Well, let's dive into it. I feel like it's such a taboo subject when we talk about mortgages. It's such a scary thing. But where would you say you should start when it comes to applying for a mortgage? Like, talk to us about the basics first. Let's really break it down. And can you give it to me in like layman? What's that saying? Layman's
terms. Yep.
Let's make it really simple.
I think most brokers would jump to, speak to a broker and understand what you can borrow. Actually, you need to go one step back and go, actually, where do I look for advice first? Because there's a few different places that you should go. So the first, you could go direct to a bank. You could walk into a high street bank and make an appointment. They'll talk you through their products only. They'll talk you about their service. They won't do anything for you. So that's the direct kind of model. You can go to what's called a tied advisor.
Yes.
Okay. Now they work with, they represent either the bank or an estate agent who's selling you the property. So if the estate agent is motivated to sell the property in any which way, then they're going to put pressure on the tied advisor to maybe push a mortgage product that isn't quite suitable for you, and they only have access to fewer mortgage providers than what an independent broker would do, which is what I am.
Okay, I've actually never heard of a tiered advisor.
Tied advisor, yeah.
I've never heard of that.
No.
So maybe not so...
But I mean, there's some out there, and I'm not saying that they all look after themselves, but there's obviously that higher risk because the estate agent doesn't want to lose the sale. And because they have access to fewer banks and providers and fewer products, you could end up being recommended a product that's more expensive than what you could find elsewhere, versus someone like an independent broker who's works for you, entirely for you. Where you go, they go, and vice versa. So. And
you guys have access to the whole market.
Yeah.
So you can look at absolutely everything. You have no restrictions.
No.
Okay.
Whatever's right for the client, that's where we'll go.
And all the differences between well, there's lots of difference between going to a bank direct. I'm going to not even mention that other one because I think, and going to a broker is that we would pay you a fee, right? There's a fee for the service.
Yeah, depends. Some brokers are fee free, and they'll take their commission from the bank only.
Okay.
And some will charge a fee for their service. We are a broker that charges a fee.
Is it a percentage?
No, there's no set fee. There's no set fee.
How does that work then?
It can be up to 1% of the loan amount, which sounds scary, right? Because if it's a £100,000 mortgage, that's a £1,000 fee.
Yeah.
That's in really complex cases. So if maybe we're dealing with someone who's based outside the UK or complex income, typically it's a fixed fee that's agreed upfront with you before you do anything. So I'll have a conversation with you. We'll talk about your affordability, the process, what we do for you, and then we say, like, okay, look, if you'd like to go ahead with us, our fee is X, and here's a document to sign to say there's no misunderstandings at that point. Would you like to go ahead and go from there?
And I guess, because I'll be honest, I'm more than happy to talk about like what I did. I have a mortgage and I went direct to bank.
Yeah.
Don't know why. I think I was quite young. I think I had a trust in the bank because I like worked for it at the time.
Yeah.
But now in my position, now when I think about, because I am, as I said to you, thinking about, right, what do I do next? I don't understand why you wouldn't go to a broker because you get a whole scope of everything.
Yeah, so I think the stat year on year is around 8 out of 10 or 8 to 9 out of 10 mortgages are arranged through a broker.
Okay, makes sense. Doesn't
Yeah,
it?
and the reasons when you lay it out in terms of access, so I mean we could have a call this afternoon immediately. You don't have to make an appointment. Knowledge, so you walk into a high street bank, they can only talk to you about their products.
Yeah.
You've then got to go the next day into someone else to compare, and you're still not really sure what you're comparing because you don't know what you're doing.
The brokers kind of do the work for you.
We do the work for you, the research, the time, the paperwork,
Yeah.
supporting the solicitor once you've got the offer, looking after your income protection, which is important, and critical
Someone
illness.
asked about that, yeah.
Yeah, someone asked about that. So it's all of your needs are met under one roof.
Yeah.
With most brokers, some will just obviously do more than others.
So talk to me, say we're first going into this and I'm on the run up to maybe in the next couple of months, half a year, we're wanting to get a mortgage. What are we avoiding doing in our lifestyle with our finances? What should we avoid on the run up to, okay, I'm in that stage of life where I want to apply for a mortgage?
Definitely don't make any big purchases. So don't go and buy an expensive sofa before you've got the mortgage and you moved in. Try and avoid anything that would lead to a hard credit check on your profile.
Like
phone bills. So I had my own example. I moved house in March this year. My phone bill and my credit card both needed to be renewed.
Okay.
So that was a hard check for my phone, hard check for the bank, and a hard check for the utility provider for my new place, and that brought my credit score down. Now, it was just timing. It will recover, but you definitely don't want to take out any credit unless you need to. If you're in a real position where you need to, then maybe look at it, but be really careful. Try and avoid anyone who does do a hard credit check to see if you're eligible first. Try and move on to a soft credit check. So you don't want to take any credit unless you really, really need to. But
so don't go and get the car.
Don't go and get the car. Don't go and get the car.
Should we really be reducing our spending? Are we trying to like look really good on paper, or does it not matter?
Definitely stay out of an overdraft.
Okay.
So overdrafts, the banks absolutely detest. So if you are someone who lives in an overdraft and you get, say you have a £15 overdraft and then you get paid and you go back to zero and at the end of the next month you're back to minus 1,500, banks won't lend to you.
That makes me feel quite sad, sad inside, doesn't it? Because the bank offers it to you.
Yeah.
You know, we're in a cost of living crisis. We're living.
People need that money,
and then you get penalised for it.
Well, yeah, I mean, look,
feels a little bit backwards.
The banks are looking after themselves, right? Because if you're there's no indication to them that you're in a position to ever be able to pay that back. In fact, when you've got a mortgage, you're going to be less likely to be able to pay that overdraft back, which puts them at risk, which is obviously what they're looking after. But it does also put you at risk as well. So the regulation is it has to protect the client, customer, and the bank. So if it has to be considered responsible lending, and if you are in your overdraft, even if you've got a £300-400 limit and you're paying it back, I would suggest get it to zero, cut it out entirely.
Get rid of it.
Yeah, if you can.
Get rid of your overdraft. So interesting. And with regards to credit cards, I have a credit card. I love spending on my credit card. I feel like I'm in quite a good habit with it. Pay it off, blah, blah, blah. Do we want to be avoiding that?
No, no. If you use your credit card and you use it well when you pay it off monthly, absolutely fine. Obviously, don't miss any payments because that's
Yeah.
going to come up straight away.
Yeah.
Do not ignore anything. So if you do miss a payment on a direct debit or a credit card payment, deal with it immediately. If you ignore it, it won't go away.
Okay.
I do have clients who come to me and they're sort of 24, 25. Yeah, I was a bit silly when I was 18. I thought it'd go away. It didn't. And then they had a CCJ on their account. And suddenly their mortgage is, I don't know, 0.5% more or something like that.
Does the percentage of the mortgage go up if you have all these problems?
Not directly. Not
Okay.
just. It doesn't just work that linear in that linear fashion. But it will mean that you need a more specialist bank, and obviously there's a premium to reflect the risk.
Okay. Does the type of credit card you have affect you in any way? For example, if you have like an Amex or a credit card that you isn't.
Not really.
No.
No, as long as you keep the payments up to date.
So it's the habit of.
It's the
paying
habit.
off your
Yeah,
credit
yeah.
card.
Spend, pay it off. Spend,
Yeah,
pay it off.
I love my credit card because I feel like whatever I've paid for, if it's not risky, but if
Gives
I
you
know there's a
protection.
potential
Yeah,
problem,
yeah.
I'd be like to be protected.
Yeah,
for
definitely.
it.
Yeah, I completely agree with that.
Yeah.
And so if you're able to spend the money and pay it off, absolutely fine.
Yeah.
That will help your credit profile, and that's a good indication to the
How
bank.
do you check your credit score?
Go online,
Yeah.
Google it, and just put credit reference agency. And there's a few. I don't know if we can name them or not. They're a helpful guide. They're not to be relied upon because.
Okay.
Can we name them? Can we name them?
Yeah, of course,
Yeah.
do
So
anyone.
so there's Experian, Equifax. You can use ClearScore, TransUnion. The difficulty with a credit score is that they all use their own metrics, they all use their own measures and their own scores. So Experian is 999, for example. I think ClearScore is like 710. So you get a score out of 710 or 999, and they never quite match up. So only the other week I got both. I got an update from Experian saying my score had gone up, and then a day after from ClearScore it had gone down. So it's a helpful guide, right? Because they all look at different things.
Don't be too transfixed. To
Yeah,
it.
don't get too held up on it. If you've got a
Okay.
999 score or even 899 or something on Experian, that's a good indication.
That's good advice.
Yeah, but if you are worried, I mean, and this is where we start to develop it. So you'd if you are thinking about these things, you're doing all the right habits. You come to me and say, look, I'd like to see what my affordability is, and we talk about that on the phone based on your salary or self-employed income, and then I'd suggest we probably work on an agreement in principle from a bank, and that's where the bank themselves will do a kind of a soft check on you,
yeah.
just to understand that you're okay as long as everything else
Yeah.
lines up. Then we're happy to lend you
Yeah.
the mortgage, and that'll either come back yes or no, and if it's no, then we need to look at why, and if it's yes, then obviously great.
Touching on great things to do that you guys love to see
Yeah.
before applying for a mortgage. I guess it's kind of the opposite of what you've just said, but any really useful like hints and tips of what is good and like will really help you?
It's just managing your finances well.
Okay.
If you're on a credit card and you're paying 28%, move that onto a 0% credit card. If you've got an overdraft, pay it off and keep it paid off. Don't just dip into it 1 month and then.
I never knew how damaging that was.
Yeah. Ask my wife. I had to tell her when we moved out, so you've got to clear that overdraft, and she did. But the bank did pick up on it because it was reducing month on month, and they did say, yeah, look, what is this going to be paid off? And it was, and it has been. But the overdraft can be a real killer.
Never knew that.
Yeah, it can be a real killer.
So interesting.
Something to avoid that I should mention, definitely, payday loans.
Tell me more.
Stay away from them.
Like, what's a payday loan?
So a payday loan is short-term money. So if you're really, really stuck and you can go and apply for a payday loan, you'll probably get the money. The interest rate will be extortionate.
Yeah.
The banks also don't like that. Put that in the same category as overdrafts.
Okay.
Because that's an indication that you're really struggling for money and you need something short-term.
Yeah.
And again, and that will really harm your credit score. So you should definitely stay away from that.
Similar for things like Klarna and those.
Yeah. So Klarna's an interesting one. I had a client not so long ago who used Klarna excessively. I'm talking hundreds of transactions. There's lots of people that do that. In most cases, it's absolutely fine. There'll be certain cases where, for other reasons within the application, you need to go to a more bespoke bank. We need a bit more of a different arrangement because of maybe self-employed income or small deposit or whatever it is. And if they look at a more manual overview, they'll see all the Klarna transactions. And then one bank did come back and say, actually, this is a reliance on spreading income over a amount of time. So Klarna's okay generally. make your payments on time. Definitely.
I guess if you miss it.
Yeah, if you miss it, but again, deal with it straight away, because I mean, no, you shouldn't really be putting large purchases on Klarna. In my opinion, it's just clothes and stuff. I guess.
Talking about affordability, that's a good one to run to. I really think it's important to live within your means. It's something that I feel quite passionate about. And my saying is, if you can't buy that item like 4 times, 5 times, don't get it.
Yeah.
Because generally, like, to me, that means it's probably not affordable.
Yeah.
I mean, it's always difficult because I think life also is for living, and it's important to put your money where you want to. But I think just as a general rule, that really worked for me. I remember when I got a mortgage. I got a mortgage quite young, but I remember before I got that mortgage, I was so strict. Like, I didn't live. I literally saved every single penny. I was so militant, and some people can look back and think like, oh, you did that in your early 20s, like how boring.
Yeah.
But I think it was just like a general discipline.
Yeah.
And I think that's kind of what allowed me to get that. But
it definitely is. I mean, the problem with the credit scorer, and if you do, let's say you have a 6-month period where you just money's all over the place and you can't catch up with yourself, it takes so long. It takes years for that to recover and to be reflected on your history and your profile. And that's, I don't think people understand. Yeah, you can make a missed payment. That happens. It's one of those things. If there's 2 or 3, again, we can probably explain that there's a life event going on or something like that. And banks are okay with that. They're human beings at the end of the day. But if it can take like 4 or 5 years for your score to recover if you keep making the same mistakes.
Yeah.
So if you are 20 or 21, then suddenly you're 24, 26, 25, 26, and you're still paying for mistakes that you made when you were younger. And you're going to go, oh, I really wish I knew that. That's what you're going to say. I really wish I knew that now, and then I can avoid.
Feels quite heavy, doesn't it?
It does. I don't want to put a depressing.
No, it's
but
real life.
Yeah, these are honest
Real
cases that we have.
You just made an interesting comment. You said banks are humans at the end of the day. Are they actually, or will the computer always win?
So there's both. And I know that sits on the fence, but that's a true answer. Most banks will rely on their own data, and the computer will do most of the work for them. If there's a specific example or a circumstance, then we can call up the bank and say, this is what happened. We know it's not ideal. Are you happy to review it? And then depending on the case overall and its individual merit, they might go, yes, that's okay. We'll take a view on that, or no. And then we need to find another lender.
Interesting. So incentives out there at the moment, I don't know much about them at all. So you need to help me out. But like the likes of, to help people to get a mortgage.
Yeah.
What is there?
So, I mean, nothing's replaced Help to Buy, which was really successful and helped people across the country.
Can you remind me what exactly that is?
So Help to Buy was the government would give you an equity loan, so an interest-free equity loan for 5 years, up to 20% of the property value outside London and 40% inside London. So you're basically getting free money for 5 years.
Okay. What's the catch?
There wasn't really, to be honest.
Okay.
In my opinion, it hurt the property market a little bit because it caused prices to increase because demand was so high. So it created a lot of people that made some money that probably wasn't affected by Help to Buy. So sales in the area increased, which put the prices up. But there wasn't really a catch. Obviously, that money needs to be paid back at some point. So when you sell the property, there's going to be 20% that goes back to the government or 40% that goes back to the government.
Okay.
But that's a problem 5 years down the line. I mean, but that Help to Buy scheme finished 3 or 4 years ago.
Oh, it doesn't exist anymore?
It doesn't exist anymore. So in terms of...
Why?
It had to be wrapped up. It was going on for so long.
Okay.
It was probably in place, I think, from 2016. So it wasn't a forever solution.
Okay.
There hasn't been anything that's replaced that as successful. There's shared ownership.
That was one of the questions.
Yeah.
Can you tell me about that?
Yeah, so shared ownership, you buy a proportion of the property. So it could be 50 or 60%, and then or 70%, whatever you can afford. And then you rent the portion that you don't own. So there's a mortgage payment to the management company or the housing association.
Oh.
So you're paying a mortgage, and I know because my first mortgage was shared ownership, you're paying a mortgage and then you're paying rent as well to the housing association, and that's what brings the 100% of the ownership together.
I'm trying to get my head around it. I'm a bit slow when it comes to stuff like this. I'm like really trying to compute it. So like, what's the pros and cons of that? Because a few people wrote in about shared ownership.
So the pros are, it's more rich. You're mortgaging what you can afford, so you're not stretching yourself too far. And the difference in the rental payment is that it'll be lower than maybe mortgaging the full mortgage
There's
balance.
less risk.
There is less risk to you, yeah, because you're mortgaging less. The downside is that you're still paying rent, which can increase every year by the housing association if they put the rent part up. There's nothing you can do about that. You're also living in a flat, most likely. And
Do they not do it on houses?
No, they do, but most likely it's a flat. They also like to put service charge up. So suddenly you're still paying a mortgage, but you're paying the service charge and the rent, and it becomes really expensive, which is what happened to me, my first flat. So
Okay.
it's helpful. It's not the solution. It's not been picked up. It's not as popular as Help to Buy because there are some downsides to it.
Yeah, it sounds like a lot of catches in
Yeah,
there.
you're still paying the rent part, which is the bit I began to resent because that money's going towards nothing. It's just
Nothing.
like renting a normal house, right?
And could you give me just figure wise a little bit on like what the rent would be?
It depends.
versus the
It really
mortgage?
depends. So if you put
Throw some ballpark.
if you put a 5% deposit down, which you're allowed to do, you put a 45% mortgage, and then you rent the other 50%. So it depends on the value of the property.
Say it was a 200k property.
You're putting me right on the spot. I'd have to get the calculator
I
out.
just was trying to figure out like what the mortgage payment would look like versus then paying rent as well.
Yeah. So and again, if you are looking at shared ownership, reach out to a broker who can talk you through that because it is specific to your affordability. You have to, just because shared ownership is there, you still have to demonstrate you can afford it.
Yeah.
So there has to be those assessments done.
Okay. One thing I would just like to touch on that's personal to me that Dan just mentioned about service charge. And I feel like personally, if anyone said to me like, Lucy, like, what would you recommend buying, like a house or an apartment? The difference is freehold and leasehold, right?
Yeah.
I have unfortunately been caught in a situation where my service charge is disgustingly high and you have no control over it. And it's really scary.
Yeah.
And it's made me almost resent my home a little bit as well,
Yeah.
because it's this thing that you have no control over, changes, and unfortunately I've got no representation of it.
No.
So I'm happy to share this, and I'll share this with you, and I'll be interested to see your exact reaction. My service charge a year is over £5,000,
Yeah.
which is disgusting.
Extortionate.
That's like £450 a month.
Yeah.
One of the lifts in my apartment has never worked. And this is the things you're paying for: the lights in the hallway, the lifts, if you have like a concierge or anything. It's like I don't have any of that, and it makes me feel so resentful.
Yeah.
Whereas I feel like when you have a leasehold, I personally feel like you have a lot more control.
Yeah. So freehold, you have the control.
Sorry, that's what I mean. Sorry, freehold, you
yeah.
have a lot more control.
There's no service charge with freehold. You own the land and you own the house.
Yeah.
Service charges. I mean, we're based in London predominantly, so the service charge is six grand, 5-figure service charges. And I mean, I don't know so much in where we are in Birmingham, but people don't mind paying it if you get something out of it. So lifts at work, for example, you might get a gym, you might get concierge, a swimming pool perhaps. I mean,
that would be lovely.
There's a little bit of value in that you can understand, but for some people, for most people like yourself, it's just a cost. It's a horrible cost. And banks know that, and they're picking up on that, because your service charge makes your flat less attractive to a prospective buyer, because they're thinking, okay, I love the flat, I love the area, I love everything about it. Why do I want to pay £5,000? Basically, if we're not really getting any value for it, which means that banks in turn can turn around and go, well, if we don't feel that service charge is suitable, it matches the value, and therefore they won't give a mortgage to the buyer. So you're stuck. And unfortunately, there isn't a lot you can do about it. Let's say you've got no representation, and then they're certainly not going to cut it from £5,000 to £2,000. The only thing it's going to do is go up. And
it's really scary.
It is scary. And for most people, especially first time, you're probably looking at a flat.
Of course, like
unless you're
in
in a fortunate position where you can afford a house. A flat is probably what you're going to end up with.
Well, that's what I did. I was city centre living. I was a corporate girl. I wanted somewhere that was city centre, close to work. So I thought, great. I had no clue, and it's only like I will say I think I was silly. I was silly. I didn't realise the exact implication and what can happen, and the lack of control. And then I'm here 7 years later, and I'm like, holy shit, this is crazy, and it absolutely impacts a future buyer, and lenders really look at it, and I'm like,
it's a problem, and
it feels like you're
and no one told you that. And we will be honest with clients, particularly if you're first time buyers, and say that you might have a problem selling this in a few years' time, because that service charge is only going one way. And I don't want my client coming back to me in 3 years going, I wish I knew what you just said. We will say, look, I'm not here to stop you. So I'm just going to put in my
Lightly,
experience. Yeah,
yeah.
just let's say, look, you need to think about this.
Yeah.
Um,
That's what I say to people now. If they're like, "Oh, would you recommend getting an apartment over a house?" I'd like scream at them.
House.
I'm like, get the
Yeah.
like house, because this shit's crazy and you
Yeah.
feel like your hands are tied. That's how I
Yeah.
feel. Like, that's how I always describe to like my friends and
Yeah,
family.
yeah.
I'm like, my hands are tied and it feels disgusting,
Yeah.
and you feel angry.
Yeah.
Crazy. Any other incentives out there at the moment other than shared ownership?
I mean, there's a couple of schemes, but again, that they haven't really taken off. There's a deposit unlock scheme.
Never heard of it.
No, see, it's only available in different pockets of the country and through different lenders. And there's an own new scheme. It's just own new. It's a bit of a mouthful.
Okay.
Again, that's for new build properties where the developer will most likely offer a cash incentive to the buyer to buy the home.
Oh, interesting.
Yeah, but rather than give that to the buyer, they give it to their lender, and that allows the lender to
Get the business.
get the business, but discount the interest rate.
Okay.
So
That's interesting.
yeah, it's quite well thought through. I like it. It hasn't been taken up, but again, it's only certain banks, 4 or 5, so it's a handful, and in certain developments. But your interest rate could be maybe 2%, 1%, back to where they were a few years ago, because the incentive is how it's being used. So it's a good incentive. The problem with it is that doesn't last forever. So when you come to remortgage, you're going to go back. If the rates are still where they are now,
Yeah.
4.5%, 5%,
Yeah.
whatever, you're going to get that massive jump, which
Yeah.
you might be okay. Well, at 5 years, I'm going to be earning more money.
Yeah.
Whatever, but that's the risk.
That's the thing, isn't it? What's your opinions on buying a new build property versus buying an older property?
Yeah, good question. So new build, there is a perception, belief, fact maybe that there's a premium attached to a new build. And what I mean by that is that the developer is selling it more than the true market value. The benefits of a new build is that you just move straight in. You've got white walls, you decorate how you want, you've got no hassle, you've got guarantees, warranties. It's nice, it's peaceful. I've just moved into a new build house. So
How are you finding it?
Yeah, very nice, thank
Good.
you. Apart from the arguments about how we decorate things and usual stuff. But new build is nice. It's clean, it's yours, you're the first one to live in it. So there's that. And you will get some incentives in most cases, so you can benefit, whether that's the own new scheme, you can take cash back from the developer to put towards stamp duty or fees or whatever. In terms of new build lending, so actually borrowing, now if you have a small deposit, it's harder to borrow on a new build flat at, say, with a 10% deposit. So if you have because of the premium, so the new build premium.
Okay.
So if you're buying a property for 300,
Yeah.
for example, it may be, and it depends on where in the country and who the developer is, this new build premiums may be somewhere between 3 and 5%. So really the true market value is 285, so 5% less,
Okay.
rather than 300. So banks are cautious by nature. So the smaller deposit at 10% means that you're a perceived higher risk to them. So new build lending on flats is harder unless you've got a bigger deposit.
See, another side not to do the flat.
Well, yeah, another side, yeah. I mean,
You know what I mean?
can be done, but again, you're paying a premium in terms of the interest rate, because there's only 2 or 3 banks that will do that for you. And then if you buy a house or a second-hand flat that's been lived in, you haven't got any of those worries in terms of premium.
Oh, interesting.
Because the house has already been there. It's already probably
Okay.
depreciated and appreciated in value. So banks are
Okay.
comfortable with that. So
Oh, I didn't know that. That's really interesting. Talk to us about you put this in your agenda when me and Dan shared agendas, and I didn't even know it existed. Again, because I just don't think, if you're not in the industry, you don't look for it too much. But
No.
you were talking to me about AI and digital lenders, like, which scares the hell out of me. Like, what even is this? It's like robots doing your mortgage for you.
yeah, I mean, any broker will probably sit here and say the biggest problem in the industry is the speed of the way things get done. Now, it's a regulated process, so there's things that we have to do: check pay slips, income, make sure the advice is correct. That's all fine, no problems with that whatsoever. But sometimes a mortgage application can take months. I mean, that's not for anyone's fault. It's just the nature of all the questions that come up. There has been a rise in digital-based lenders who are based only online, so they're not on the high street.
Okay.
They've got a low-cost base because they're just in a little office somewhere, a small team of people, and they just let the computer do it all.
Okay.
So they will underwrite and assess your application as it's being typed. So as I'm typing it for you, as I'm typing your application,
Yeah.
they're already checking your address as I'm halfway through.
Okay.
They're already checking who you are,
It's
your passport.
faster.
It's faster, and that allows, in some cases, mortgage offers to be issued in like 2 hours, 2 or 3 hours, which is crazy because they'll also do a valuation, but that'll be online based. So AI is a step in the right direction.
So you think this is positive?
I think it's positive.
But it's not going to get rid of you guys?
No, it's not going to get rid of us
Oh,
because we're still
fine.
giving advice because there has to be a reason to go to that bank. Now they might be priced slightly differently. They might do something that someone else doesn't. There has to be a reason to apply to them. So no, we're not being replaced.
Oh, that's good. The current climate, we spoke just before we started pressing record that that Bank of England base rate has come down to
4.75.
What was it before?
5.
So it's come down by
0.25%.
So it's good.
That's good.
Talk to us a little bit about that.
Yeah, so I mean, you won't see a direct, an immediate change in your fixed rate mortgages. That's kind of priced into the rates that we see available. What it does do is improve confidence. And when people are more confident and they feel that the economy is going in the right direction, they're more certain, and then they make more like to make a buying decision. And that means that people will start to view property, start to transact, and start to do more. And in turn, the more confident the economy is, swap rates, which price the underlying price of the mortgage rates, will hopefully start to settle and then come down, and that means that we'll all get lower interest rates.
Thank God for that.
That's the cycle. But like we said just before we come on, that there's so many different variables that come in particular the wars that are going on, the US election this week. There's so many different variables that come into play that feed into that certainty and that confidence. So we just have to say, look, we'll do the best we can. A broker can't sit here and say in March they're going to be 3% because they don't know. Anyone says that they do is lying.
Okay.
But what a broker can do is move around the market to get you the best rate. So it's going to take you probably on average 3 to 4 months to buy a house, to get ready to go do all the legal work. Over that time, hopefully rates come down. We'll start with the best rate that's here now, and then we'll see where we are in February. And if a rate is cheaper, we'll make a second application.
How many times does the Bank of England base rate change yearly?
They meet every 6 weeks, I believe.
They meet every 6 weeks?
Or 6 times a year. 6 weeks or 6 times a year.
And talking about fixing rates, do you have a pattern of, because you can fix 2 years or 5 years, can you fix any other amount?
Yeah, 3, and there's some 7 and 10 year fixes.
What do you generally like? I know it's all different, circumstantial, but what do you tend to advise?
The most popular at the moment is 2 year fixed.
Okay.
Now, culturally in the UK, I feel that most, myself included, we like a little bit of risk. So we're taking a risk that in 2 years' time rates are lower. So we're all living in hope that rates will be lower. So in 2 years' time, we can refinance to a cheaper rate. There are people out there that go, actually, the last 2 years have been really scary for us, and we want to fix in for longer and forget about it. We don't want to deal with solicitors, we don't want to deal with banks, we don't want to worry about interest rates, we just want a 5 year fixed. And you have to think about, that makes sense, but you have to think about your plan. So if you're in maybe your first home or your second home and it's not your forever home, and you're likely to move, are you going to move within 3 years? Because if you are going to move in 3 years, you probably don't want a 5 year fix because you're going to be locked in. So that doesn't make any sense.
And 5 years, when you think about it, feels like quite a long time.
It's a long time, and a lot can change. And particularly if you're a couple, and we see this so many times, if you split up and you've got a 5 year fixed, you're both in a really difficult position.
Talk to us about that then.
Well, you have to make a decision.
This is why it is so important when doing your mortgage application with another person.
And again, I have to have those conversations with people when they say 5 year fix and say, look, we never know what's around the corner, right? You need to protect yourself, and I think we're going to touch on this about the deed of trust, or declaration of trust. So if you're looking to buy a property and one of you has, say, a 50k deposit and the other has 25k, there's obviously an imbalance there. A deed of trust is something you can put in place. This is before you're married. I don't want to go down the married, because there's different rules and stuff. You can put a deed of trust in place that protects your interest. So if you do split up, then the person who put in 50 gets back 50, the person who gets 25 gets back 25, and then you take 50% each of what's left.
That's good.
Yeah, so that's good. So your solicitor can do that. Fairly easy to do.
Okay.
But with a 5 year fixed, if you do split up and neither of you want to or can afford to manage the mortgage yourself, you need to sell the property. Now you're going to be locked in for 5 years, so there's going to be an early repayment charge to that. Now that could be, depends on the property value, it could be 2, 3, 4, 5% of the amount you owe the bank. So it's going to be a lot of money. On top of the stress of splitting up and the hassle, moving everything out. I'm not saying everyone's going to split up, but in the UK we do know that happens, right? Things happen. So you have to think about that. So it's messy. It's messy. If you
It's
take a
really
5 year,
messy.
yeah,
Yeah.
even 5 year fix.
Would you, I don't know if you ever do this, but say, for example, you have that conversation with your clients and they feel uneasy and you're getting a sense of like, would you ever say to them, like, guys, just rent for a bit? Do you ever give that kind of advice? Because then you have no problems getting out of anything.
Yeah.
Do you know what I mean?
Well, you're true. I mean, my job is to put the right questions in front of the couple, and ultimately they decide what they want to do. Really, my job is to find them the best mortgage and to secure them the mortgage. I mean, this other stuff we're talking about is just based on our experience of clients coming back to us. But yeah, you do have to say, look, does it work on affordability? So can you both afford this? What happens if you were to split up? Could one of you afford to keep the property on? And does it feel right? Because in your gut feeling, you'll know whether it feels right or not. And if it doesn't, if it's affordable but it doesn't feel right, I'd say you step back. Right?
Really?
Yeah. Don't buy it. It's such a commitment. Like, why would you do it if it doesn't feel right? You'll make a couple of payments. You'll be excited. You'll decorate the house. You'll have your first Christmas, and then you come back and you go, do you know what? We wish we moved to another area, or we didn't move it because you rushed into it. So. Okay. It's an emotion.
Oh, yeah, it's a life-changing thing.
It's life-changing, and lots of people have emotion attached to it, which I completely understand. But you do have to try and take out the emotion.
And I also think in society we feel rushed.
Yeah.
And I think we have pressures.
Yeah.
And I think we have people looking at us, and we're scared of what people think, and we want to be this picture-perfect thing. But you can't play when it comes to this stuff because, as you say, you can really be stuck. And you see it and you hear about people being caught in absolute hell and huge financial problems because of rushing into things.
Yeah.
Do you, when you think about, I don't know if this is in your remit, so we don't have to talk about it, just let me know, but do you have opinions on like renting versus a mortgage? Because I sometimes see stuff about it, especially on TikTok, about like renting versus mortgage. And I was just wondering if you had any opinions on it.
It depends on your circumstances, right? And I think, the first thing you need to look to do is a mortgage affordable, and do I want a mortgage? Because people like to rent because it gives them flexibility. They like to move around with work. They like to travel, whatever it is. They're not locked in, no hassle, no commitment. So in the UK, there is an expectation. You have a mortgage, you pay it off, you retire at 70 and everyone's happy, and that's how it works. But people like, especially nowadays, they want flexibility. You have to look at how much rent you're paying if you do want to buy, and then what does that compare to a cost of a mortgage? Does it make more sense to rent in terms of finances? Do you want that base? I mean, really, everyone does need a base, whether you like to travel or not. I mean, you can't keep going back with your mum and dad. So, no, look, I don't have an opinion one way or the other. If it works for you, great. Yeah. Then, if you want to buy it, then I'll help you buy.
I really do feel like there is such a stigma though around like when people say they're renting, especially at a later age. I think it's almost seen as like a failure, as like, oh, like you're still. I really do feel that, and I think it's silly. I think it's so silly because that works for some people.
It works, but also it's their only choice. Yeah. I mean, that's what's sad about maybe where parts of the UK is at the moment, is that people can't afford to buy. They're relying on friends and family, friends less so, but family definitely to buy their first place or their next place, or an inheritance or something like that. Is otherwise they haven't got a chance. The wage growth is slow. It's not going to get them in there. Property prices keep going up. So renting is their only option. And if that suits you and you're happy,
exactly,
it's not for me to.
That's the most important thing.
It's not for me to say otherwise.
Just touch on insurances for me, because I know you're like mortgage and protection, right?
Yes.
Or are you?
No, so that's,
you don't do protection.
I don't do protection. So we have a specialist insurance team at our firm that we introduce you to, and
so it's separate.
Yeah, and the reason for that is otherwise we'd just be too busy, and it's mortgages is a specialism in itself. So is insurance. So have individual specialisms. So in terms of our process, we'd get you the mortgage offer, got that stability, everyone's happy. Okay, now we need to be a bit more serious about things. We need to look at your protection to make sure that if you're employed, that your work cover is suitable to cover what you're borrowing. Again, what happens if one of you is permanently injured and you can't work? What's your protections there? Because ultimately the bank want their money back. So we need to put those.
Savage.
Yeah, we need to put those protections in place.
But talking to Dan, and not Dan the mortgage advisor, just you as a person, take away all your learnings and roles and responsibility. How important is protection?
Essential.
Life-changing.
Yeah, essential. I mean, you never know what's around the corner, right? And then obviously when you're younger, you're less likely to become critically ill or have a really serious illness, but it does happen. And if it does happen, and in one case, then you can be in real financial distress. And not only the financial distress, you've got the upset and the emotion of dealing with the person who needs your help as well. So having that protection in place means that you haven't got to worry about the finances. That's taken care of. It's a small premium per month. It obviously depends on individual circumstances. It's not mandatory. You don't have to have it.
That's great. Yeah.
But we recommend it to every single client.
Yeah.
And then again, it's up to you if you want to go ahead with it. I have it. I pay 60, 65 quid a month for me and my family.
Me too.
Because if something happens to me, my wife and baby are looked after and the house is taken care of.
I think you'd be surprised how many people don't do it though.
Yeah.
I had a close friend of mine come on the podcast a couple of months ago. She won't mind me talking about this. She unfortunately lost her partner and father to a child in a jet ski accident, and they had nothing.
And he was young.
And she's left with nothing.
Yeah.
And they have a baby.
Yeah.
And now all of her work is around preaching to the choir about having protection insurance in place because she was left with nothing. Yeah. She has to go back to work, mourning her partner, looking after a 6-month-old baby.
And dealing with the stress of the finances, It's
But when we did that podcast, the amount of people that wrote to her saying they don't have it.
Yeah. No, I know. It's overlooked. It's like, oh, it won't happen to me.
And it's another expense.
Yeah, and it is another expense. That's true.
Like, that's what it is. Another expense.
We build it into our conversations really early because it is so important.
Okay.
So we'll ask, in terms of understanding client suitability and what's affordable for you on a monthly basis, and the client will say, okay, 2 of us, we can afford £1,500 a month. Okay, that's fine. Something we really recommend you have is protection insurance, and there's going to be a premium to that. So we should factor that in. So do we deduct that from the 1,500, or can you afford maybe 1,600?
Yeah.
So then they know when they get their mortgage offer, there's enough in the left at the end of the month that they can get the mortgage, but they're protecting themselves. It's classic. It's not going to happen to me, and then it only takes one accident, and that's it.
And when it happens to someone close to you, it makes everything so much more real.
Yeah. I've got a close. I won't share, but I've got a very close example in the summer, and heartbreaking. It's just horrible.
Puts everything into perspective. Yeah. Do you have any thoughts and feelings on like a tracker versus a fixed rate? Do you tend to advise either way, or?
Yeah, definitely. So we had that conversation. The fixed rates are great because they give you certainty of payment, security. Yeah. So if particularly for first time buyers, and to be honest, for most people, they like to know where they sit.
Most people fix, right?
Yeah, most people fix. Okay. Yeah, most people fix. The tracker is attractive. Because it's a bit more flexible.
You can get out.
But if you earn, say, bonuses on a monthly basis or quarterly basis and you have some extra cash, you can just make lump sum overpayments and reduce your mortgage balance.
Great point of conversation. Can you not do that when you're on a fix?
You can, but only up to 10% of the mortgage balance. So if you have a 100 grand mortgage, you can overpay by 10 grand.
Why is that?
Well, the bank know how much money they're going to make, so they limit you.
So banks.
Yeah, but no, I think the regulator insists that there has to be some sort of overpayment allowance. But if you're in a position where you're earning good money, and you can overpay, you can lump sum.
Great way to do it.
But it'll be slightly more expensive at the moment. So you might have some money coming in from an inheritance or from a sale of a different asset. Yeah. You want to buy the house first, and then you just want to use that money and pay down that mortgage as quickly as possible. And
people are asking, how do you overpay? It's very simple, right?
Just call the bank.
Call the bank.
Yeah.
So simple.
Yeah, call the bank.
So next question, your advice and thoughts and feelings over saving that money and investing it in whichever way you like, or paying off your mortgage?
Yes, it's a really good question. It depends. I don't want to sit on...
No, because Dan said that to me. I had a personal example that I gave Dan, and in my example, he was like, absolutely not, do not pay off that mortgage and keep the money in your savings or invest. Yeah. But
what we said about in your situation is once the money, and this is the same for everyone, once the money goes in and you pay off that mortgage, the only way you can get that money back out is by selling the property. Now, in your case, you've got the service charge and the cladding, which we mentioned. You're going to have a problem selling it. So you're not going to get that money back out maybe for 6, 9, 12 months. Now, if you're in a position where you need some cash quickly, you can't get it, because it's locked up in the property. So you have to think, okay, how much cash do I want to hold back for a rainy day fund? What kind of returns can I get in this investment? How long does that money need to be in that investment for me to see any decent returns? And then you have to think, okay, what kind of returns can I get in this investment? How long does that money need to be in that investment for me to see any decent returns? And then you have to think, okay, what kind of returns can I get in this investment for me to see any decent returns? And then you have to think, okay, how long does that money need to be in that investment for me to see any decent returns? what's my future income look like? So there's loads of different variables that come into play.
And what Dan spoke about earlier about a gut feeling, I think in that instance as well is quite a good measure in a really weird way, because I had a gut feeling of there's no way I'm putting any more money into this property, but I didn't have any like expert advice. And then I asked Dan and he said that it's like it confirms your gut feeling. Like you do get a feel of like what you think is right or wrong. Do you deal with investments or no?
No, not specifically. We don't give an investment advice. No.
Okay, that's interesting. So taking equity out of a property to move on to a second property or project, can you tell me the pros and cons?
Yeah, so in that example, so it's called a let to buy. So it's a buy to let mortgage. If you're keeping it to rent it, turn it into an investment. So that's what's called a let to buy. So it's a buy to let property where you can refinance up to 75% of the property value.
This is where my head just goes, what?
So this is where, and obviously the numbers matter here. So in these kind of examples, reach out to me and I'll break down in a couple of calculators that are quite easy to understand. So this is what we're doing and this is why it makes sense. Depends on the rental value, but it's absolutely possible. You refinance your current onto a buy-to-let mortgage, an investment mortgage, take the cash out, and then we use that towards the onward residential.
And we spoke about this off camera a little bit because I was just talking about some personal stuff with Dan, and we spoke loosely on stamp duty, which isn't in Dan's remit because that's tax.
Yeah.
But when you do go for a second and third and fourth, does it continue?
No. So it's 5%. Okay. It's 5% at the moment. So it was 3%. Government put it up to 5% last week.
But
5% each time you buy an extra property.
So even if you go into a third or fourth,
yeah.
Oh, it's a hefty one, isn't it?
Yeah.
I think it's a killer.
I think stamp duty needs to be reformed. It won't be because it's great. It's a great earner for the government. But I don't think it's entirely fair, to be honest.
I think it's a killer.
But I mean, with the position, especially with the Labour government's announcement last week, I don't think it's going to be reformed in any positive way. First-time buyers need the help, especially. I think that they could easily keep that threshold low.
First-time buyer, do you have a stamp duty?
So it's going to change on 1st of April.
Okay, from what to what?
So it's going to go from... So it's at the moment, it's no stamp duty up to 425.
Okay.
So you can get... I mean, there's just about enough time, probably, if you're lucky, to get a purchase in before that. And then it's going to go up to 250. Go down to 250, sorry.
Okay, the property of the house. So if you're buying a property over 250...
Yeah, so it's 250 up to the price you pay.
Wait. Okay. Wait. The stamp duty is 250.
No. So let me get
the amount the house costs.
So it's the limit. The limit. So it's the opening threshold of 250, and you pay the stamp duty, which is a percentage from 250 up to the price you pay.
I'm with you. It does feel like such a killer because when you think about like a second property, for example, which I think as you get older, it does become more in reach.
Yeah.
It's like you do all the maths and then you're like, oh no, you have to keep this huge pot of money separate just to give away as like a tax payment. It makes your stomach hurt.
It does. It's a lot.
But they're not silly.
No,
they're doing it for a reason.
I mean, I'm happy to share. This year, I paid 11 grand in stamp duty myself, and that house was 455. So it's a lot of money. You've got to find. It's a lot of money. On top of your deposit and all the other bits, and probably something that we should touch on is just other fees involved in using a broker or buying a house, because I don't think people will be aware of that.
Go ahead.
So, I mean, you need to think about a solicitor. You need a good solicitor, someone who's competent.
Do you recommend?
We recommend, but you can use who you want. We obviously have people that we trust. I think a good solicitor would probably be 2 to 3 grand. Now, again, you can shop around. Now, there are solicitors out there that will give you a really competitive quote, but then put their price up each time you interact with them. So you never really know where you stand. So you want to try and avoid them if you can, possibly.
Okay.
The bank will charge an arrangement fee.
Yeah.
£1,000. Sometimes it can be more, 1,500, but more likely £1,000. If you're buying a house, you might want a survey to check that it's okay structurally. Again, you could shop around, maybe £1,000, something like that. That's not mandatory. And then a broker fee if you decide to use a broker.
There's a lot that goes into it.
Yeah, so you probably need 4 to 5 grand in fees. You need stamp duty if you've got to pay it, and you need your deposit. A lot of cash.
It's a lot of money. Let's go into some of the questions. So these are how to get out of my property without having to pay off the Help to Buy loan in full.
So sell the property is the honest answer. So if you're in London, the government will take 40% of the sale price back.
Okay.
That's the only way to sell it. Or, which she doesn't want to do, I mean, you can refinance and pay off the equity loan, which is an option. So as long as it's affordable, a person there can refinance, pay back the government so they get their money back, and then you own 100% of the
I'm with
property.
you. Okay.
Now, the downside to that is obviously you're borrowing more money, so your mortgage payment is going to go up,
Yeah.
the interest rate's going to go up.
Do you think remortgaging right now is a good idea?
If you need to, yeah. So if your existing deal expires within 6 months, you can start looking.
And can you only remortgage when your deal's almost up?
Well, yeah, you would only do it then because you're locked in. So you wouldn't
You can't
do it.
remortgage randomly.
Not if you're in a fixed rate, no.
Okay. Oh, I guess that's another
On a tracker.
pro of a tracker.
Yeah, if you're on a tracker, yeah, exactly. So if you are on a tracker and things start to get a little bit scary again in terms of everything's going up in price, yeah, you've got that flexibility to go straight onto a fixed rate and have that certainty again.
Cool. We use Help to Buy and won't be able to pay it off in full at 5 years. What would you recommend? Is that the same as the first
What was the
We use the Help to Buy. A lot of people ask this, because is there a term with that Help to Buy?
Yeah, so
scheme?
you start paying interest at the beginning of year 6. So once people get to the 6th year, you'll start paying interest on the equity loan,
Which is why people want
which
to.
is why people are asking.
So is there any way around that?
Pay it off, sell the property,
Move.
you move. Yeah. You need to look at whether it's cheaper for you to pay the interest on the equity loan, or to pay it off. Or what are your ambitions? Do you want to stay there forever? If you don't want to stay, maybe move.
I think it's also circumstantial. Like, say, for
Yeah.
example, you're in that property and then you've had a family,
Yeah.
and it's convenient and it suits you. It's
Yeah.
not. People don't necessarily just want to
Yeah.
get up and leave.
Yeah, and this is why brokers exist, right? Because there's so many different variables that come into play and so many different things to think about. If you go down that tied advisor route or that direct route, they have limited knowledge and experience, whereas we're used to dealing with hundreds of products, hundreds of different scenarios,
Complex.
things we've seen before. So your scenarios probably aren't new to us,
Yeah.
but it does really depend on the individual circumstances, particularly if you've got a life event coming up, like you want to get married. It's obviously going to be a big expense if you're thinking of
What would you do in that case?
having a baby.
Do you have people come to you and say, I'm looking to get married?
Where people that are sort of 28, 29 and
Yeah.
she's looking at him on the call or in the meeting, giving him a nudge. So yeah, we have to think about these things and starting kids and family because maternity pay and stuff. So
Oh, good leading question, because a lot of people were asking about how going or being on maternity affects you.
yeah, it's fine. It's not,
Okay.
They can't discriminate on that basis, but they will do. They'll ask for your full pay slip before you went on maternity leave. They'll ask for a return to work letter from your employer just to
Okay.
confirm that you are going back to work.
Okay.
And if there's any changes to your contract, so if you're going from full-time to part-time,
Yeah.
and obviously what your income would be.
Okay.
So that's okay.
That's good. We wouldn't want to see that. I don't think that would. Yeah. Not sure if this is your remit, but what's your advice on buying as an individual or buying as a limited company?
Yeah.
I'm actually really interested in this.
Yeah, so again, I have to skirt around the facts because some of this can be tax information.
Okay.
So we recommend 2 things. Look at both options, buy-to-let, personal name and limited company, but speak to an accountant as well. And then the 3 of us...
Is that another cost?
It may be, but that accountant could say, and that's the reason why you'd consider a limited company, because if you have ambitions of building a buy-to-let portfolio, which people do, it's probably more tax efficient to have that in a limited company because you're paying 19 or 25% tax rather than income tax, which will be 40%, maybe 45%, depending if you're basic or higher rate or additional rate taxpayer. So your limited company structure separates it from a personal asset, and you'll pay less tax in a limited company of 19 or 25% at the moment.
So the most beneficial aspect of buying the property in a limited company is that you pay less tax.
You pay less tax, yes.
Are there any other catches?
They're more expensive. The limited company buy-to-let mortgages are more expensive.
Okay, so the rates are higher.
Yeah, rates are higher and the arrangement fees are higher as well. Some of those fees you may be able to offset, and that's what the accountant will talk to you about. Personal name, I mean, it depends on what part of the country you're in terms of the rental yield that you're going to get.
Why is that?
Well, because the mortgage rates, if you're renting a property for £1,000 a month, say, and your mortgage payment is £800 a month, You've probably got to pay a lettings agent to handle it all for you. Insurance, you've got to pay tax on that income. There's not a lot left. Is it worthwhile doing, along with the headache, right?
Yeah, I
Whereas
hear
some parts of the country, the yield is probably higher, but you're maybe
Yeah.
renting it for 1,500, and you've got a little bit more to play with. But if you want to buy property and you want that to be your kind of investment and pension, if you like, to hold it, and then yeah, probably a limited company is best route to go.
So interesting. This is an interesting one. How do you help people who can no longer work due to health or mental health issues? Is this where the protection comes into play?
We're one step back from that. So we're trained to recognise vulnerable traits, including mental health. So we would ask all clients very openly, is there any additional support that you might need from us in the way we communicate with you? Do you want a parent involved, a friend, documentation in a certain way? Understand that obviously sometimes they might be having a bad day, so they might be around. So again, there's no pressure and never any hard sell. So we want to understand their position first. Unfortunately, if they can't work, we can't demonstrate they can afford a mortgage. And equally, if they're in and out of work or they can't hold down a job, while they might have a job for 3 months, if we do secure them a mortgage and then they're out of work immediately after, then it's going to put them in a real position, and that's only going to add to their problems and not help them problems. So we tread really carefully. We're trained to recognise and help as much as we can, but there is only so much we can do.
Yeah. Oh, I think we've touched on this, but just answer anyways. Do you have to remortgage if you want to buy your ex out of a property or a joint mortgage? What's the option? So they have split up. What did we talk about? I can't even remember what you said. You said you have to...
So yeah, I mean, if they're both on the mortgage, is that what that question? They're both they're both
joint mortgage.
Joint mortgage. Yeah, they'll have to. It depends. I mean, I guess one of them would want to move on somewhere else and maybe get their money out. In that scenario, I guess we're assuming there. So yeah, they'd have to remortgage. The person who wrote that question would have to be in a position to afford to buy their half out, the ex-partners out. And if they can't do that, yeah, they're probably stuck.
Say, for example, you are in a situation where it's you and your partner, you have a big deposit ready to go and they don't. Would you just say don't put them on the mortgage?
No, because if they want to buy together, that's not for us to say. What we would say is that obviously one person's putting a larger deposit than someone else, and typically that's coming from family anyway. So the mum and the dad or the grandparents are saying, we're happy to help you, but we want our money protected. And it's a very simple call up the solicitor to say, can we arrange a deed of trust?
Okay.
There was a really interesting word in that question, is how do we navigate? And that's the reason that's really interesting to me is because it can be quite an awkward conversation.
Okay.
Between partners, say, well, you're putting in
of course
80-90% of the deposit. What are your expectations? And you, I don't know, maybe the honest person would say, yeah, we'll set up a deed of trust. There might be a partner in there that's thinking at the back of mind, this isn't a long-term thing. If she doesn't put anything in writing, it's 50-50. So you have to approach it very directly, in my opinion, and very honestly. But typically that question comes from the parents or the grandparents who's gifting them a large sum. So it's easier to...
It's like thinking about a prenup when you get married.
Yeah, yeah.
Similar thing,
It's
isn't
awkward.
it?
Yeah, it's awkward, but it's necessary.
It's so necessary. I was listening to a podcast about that, actually, about prenups and weddings. It just blows my mind. I'm just going back up now. What would you say on average? So if we're looking in an average figure of a house sale price, an average salary, all average terms, what is an average deposit? What does good look like? I know it's very
ideally a minimum 10% of the property value. So if you're buying at 300k, 30k deposit.
Okay.
We can work with that, and then so you need to demonstrate that you can borrow 270 as a mortgage to make up the 300, and you probably need a joint income of 50 to 60 grand, something like that.
So if you were looking at a 500k house, you'd need 50.
Yeah. As long as you can demonstrate you can borrow the remaining 90%.
Another question. Say, for example, there is a house that's 700k and you have a huge deposit. Does it still... There's a huge deposit as in like 400k. I'm just making figures out of my head. Is it still just as important to show a certain level of affordability though?
Only up to the amount you need. So
okay.
So in that case, it'd be 300k. So if you can demonstrate you can borrow 400, 500, 600k, but you only need 300, great, you're a safer risk, safer bet to the bank.
We did shared ownership. I have credit card debt. Do I keep saving for my house or do I pay off my debt?
It depends if this is interest-free credit. Is it?
I'm guessing not.
Yeah, maybe not.
Maybe
I'd probably
not.
suggest paying down the credit cards first. Ultimately, those credit card balances will work against you when you come to apply for a mortgage. So we have to look at your income, but we also look at your outgoings. So they'll assume your living expenses, typically based on the ONS data, Office of National Statistics, how much you'll spend on food and that sort of stuff. They'll assume that. But then we have to tell them what your loans are, if you've got a car on finance, for example, if you've got credit card debt, and then how much that credit card debt is. And if they're still going to be in place when that mortgage is, it will hold back how much you can borrow.
It's a bit of a catch-22, isn't it?
Yeah. So
It's like,
sorry, I was going to say if you're paying interest on it and you want to get a mortgage, I'd probably recommend paying it down.
bringing the debt down.
Yeah.
The best way to manage joint finances when buying your first house. It's so interesting when it comes to like a partner and
Yeah.
like talking about money
Yeah.
and like roles and responsibilities.
Yeah, I think it's just down to the couple. I mean, some people would prefer the man to do it. Some people would prefer for the lady to do it. Some want a joint account. I mean, it's
What's
whatever.
your thoughts on that?
Um,
Joint accounts.
I don't have any thoughts either way. I mean, I have my own, and my wife is happy for me to manage all of that. She's quite happy for me to do that, and she sorts out other stuff. So it's just how we split up the responsibility. I don't really have an account, an opinion on joint or sole or however it works. Whatever works for you. Ultimately, just make sure it's paid.
All I would say, all I would say is that, so I used to work in a bank, for those who don't know, and the amount of customers that we would see that had a joint account and one of them left the other in the dirt
Yeah.
and did a runner, and there's the overdraft.
What? Yeah. What?
Just know that you are, whatever happens in that account, you're both liable.
That's a really important point, because if you do have joint accounts or joint utilities or whatever it is from ex-partners, de-link from them immediately. Because if you assume that they'll make the payment and you haven't spoke to them in 6 months, and they assume the same, then you're both going to be impacted on your credit profile, and that's going to affect your financial health going forward.
I saw that so much.
Yeah, you will do. So de-link from any, and that's probably why I just keep it simple, because it's easier, then we know
But
who.
you don't have one.
I just have my own account and I
Yeah,
manage all the
same.
bills. Yeah, it's just easy.
Joint accounts scare me a little bit. I just think, what's the need? If you have your own roles and responsibilities, then joint accounts scare me.
Yeah.
And I think it scares me because of what I've witnessed
Yeah.
in the bank when I used to work there. You'd go home feeling so sad.
Yeah.
It's scary.
Yeah.
Interesting one. When you're self-employed, you have to have 2 years of accounts.
That's the myth.
There we go. You've answered my question.
Yeah.
So
That's generally true. So that's broadly, with most banks, that's true, that you need 2 years worth of limited company accounts or being self-employed. There are specialist banks out there that if you've been employed for 1 year, then that's fine. So if you've only been trading for 1 year, no problem. There are banks out there that if you've gone from sole trader to limited company or vice versa, and you've got 1 year behind you, you can do that. So definitely speak to a broker.
there's ways around
Yeah,
it.
definitely speak to a broker.
This lady bought a house by herself and now her partner's moved in with her. Should she, I don't even know what you have to do like by law, but should she add him onto the mortgage?
Depends if they're married or not. I mean, again,
I'm guessing not.
No, perhaps not. Don't have to.
Really?
No, it's ultimately, as long as she's legally liable for that mortgage because it's in her name. So if he's contributing to that and happy to contribute to that, then ultimately it's for her benefit. If they then split up, she's benefited, and that's up to him to.
I have seen something though, that if someone moves into your house and is contributing bills, but they're not officially named on the mortgage, and something happens and you need to sell, they actually can have some of the money.
I don't know.
I saw it on like this lady on TikTok who deals with like divorces and partner splits.
Yeah.
There's something where like if they are in the house and they are contributing but they're not named on the mortgage, if you do something, they can have some of the money.
I don't know that example,
No.
but there's probably some other stuff that goes into maybe if they've been there for like 10 years and if it's like a 6 month thing, and maybe not. I don't know. You have to check that out.
Again, so interesting. This is interesting. We haven't spoke on this. Thoughts and knowledge of a guarantor for a mortgage or guarantee. How do you say it? Guarantor? Guarantee?
Yeah, guarantor. So that's kind of the old fashioned.
Still happens though?
Yeah, they're out there. So it's called typically a joint borrower sole proprietor mortgage, which is available from 10 to 15 lenders. So what it means is that you use maybe your income and the income for your dad, perhaps if he's still working, to demonstrate that you can afford the mortgage, but it's only you or someone, whoever it is, the child that's going on the property and the mortgage deed.
Is it kind of like a risk thing, a fallback?
Well, yeah, I mean, ultimately, your dad would be legally liable for the mortgage as well.
Okay, yeah.
So, and obviously, your dad will be older. So, if he's in his 60s, you'll only, in most cases, get a mortgage term of, say, 10 or 15 years if you're lucky, which means you're borrowing a lot more money over a shorter period of time, which means your monthly payments are higher. So, it's available, but it doesn't suit everyone for that reason, because if your son's only on 20 grand a year, they're not going to be able to.
Trying to get a mortgage as a single mom with a dependent under 18.
Yeah.
She's saying help.
Yeah.
I'll definitely put all of Dan's details everywhere, so you literally can go to him for help.
Yeah.
But do you see that a lot? Kind of like single mothers or single fathers with dependents and no help. Does it ever what's the word I want to use? Hinder them?
Well, again, we're completely compassionate to everyone's circumstances, and we listen to everyone's story and what they're asking us to do. It just comes down to income. So if
numbers.
It's numbers, yeah.
Yeah.
But and I know it's frustrating, and it's probably not what you want to hear, but ultimately it's there to protect them, because if we can work a miracle and get them a mortgage, and then something else happens which means they can't work or whatever, they're going to have the stress of dealing with that, and then the stress of not paying their mortgage, going into arrears, their financial health being impacted for years and years. So it really is case by case.
Interesting. I've said interesting a lot today, haven't I? It really is interesting. What's the word I want to use? When you refurb a house, refurbishment?
Home improvements?
Yeah, so with home improvements, house extensions, do you recommend remortgaging for that?
If you need the cash, look at, so two ways you could do that. You remortgage on what's called a further advance, so you borrow more money from the same, well, if you stay with the same lender, it'll be a further advance. So yes, you can do that, but you just look at the cost of that loan, and then maybe compare that to an unsecured loan from someone else, and just work out the numbers.
You're taking me back 5-6 years. Buying a house on auction, do you deal with that?
I don't. Our firm does, so I've got some
advantages, disadvantages.
I mean, the advantages are you could potentially pick up a great property for a really low price.
Yeah.
The downside is that as soon as the hammer goes down, you're on the clock, so you have to complete within maybe 21 or 28 days.
Okay.
So you have to complete really quickly.
Okay.
You're probably, if it's at auction, you're buying a distressed property, so it needs a lot of work. It's going to need a lot of time. You need a lot of cash, and your cash requirement, so how much money you need up front, is higher than maybe a standard residential mortgage.
Yeah.
So you need maybe 30 or 35% of the property value, and then arrange the auction finance. So it's, for first time buyers, I probably wouldn't recommend it. If you're a bit more experienced, then
that is the thing. What is the reason people would choose to sell a house on auction? Like
speed.
Oh, okay.
Yeah, speed.
Oh, okay. Maybe I need to do that with my apartment.
Yeah, well, you could. Yeah, so you could do that.
Get this shit on auction.
Yeah.
But I typically thought it was for rundown properties that need a lot of help.
No, so I had a client at the moment I'm helping, and they're buying a property in southwest London, and there's absolutely nothing wrong with the property. Client bought it at the peak of the market and just needs to cash out as quickly as possible. He's taking a 200 grand hit just to sell it as quickly. Nothing wrong with it. And that's in that example, you're picking up a great property in a great area.
Yeah.
For a good price.
Has he done it on auction?
He's doing it for, well, it was originally on through auction. We're not going down that route for different reasons, but that was the plan. So if you need to sell something quickly, auction is the route to go down.
Maybe I need to have a look at that.
But yeah, obviously you've got to be prepared to take a hit on the price.
Yeah. I feel like I already have done. We're not talking about investing. So if I need to stretch to make an overpayment, do you think it's worth it?
Not if you need to stretch. I mean, if you're struggling to make ends meet at the end of the month, then I wouldn't recommend putting it into your mortgage payment, because the chances are that payment is really small. If you are stretching, it's going to make a very small difference to your monthly payments. If you can do it consistently, 50 quid a month, 100 quid a month, you will start to see a difference after a few years. And that's a good habit to get into.
It is a really good habit.
But if you're stretching, then probably use the money for something else.
Do banks find it like attractive does that give you like a tick in the box or something?
No, look, lots of people ask about overpayments, and the reality is most people spend all the money they have every month anyway, and that's just life, because you've got kids and you've got all sorts of stuff. So I say, unless you're in that position where you're earning quarterly bonuses or commissions and you've got large lump sums, then you're probably less likely to make the overpayments. But some people are able to do it because they budget really well. But no, banks don't really care because they'll say it's a nice to have, but we know that most people don't do it.
So it's not like you're missing out if you don't do it.
No. I mean,
that's good to know.
You will save if you can do it consistently. You'll save yourself thousands of pounds of interest over the lifetime of the mortgage.
Yeah.
But not immediately. You won't see any benefits immediately.
So interesting. Does being pregnant impact your mortgage renewal? No. Negatively.
So if you're pregnant or you've had the baby.
Pregnant.
No, not necessarily, because I assume you're still working.
Okay.
But it is material fact. So if you are remortgaging, so a remortgage is when you move from one bank to another. What you can do is stay with your existing provider, and there won't be too many questions about your position. But again, your advisor needs to just have an honest conversation with you. Are you going back to work? What are your plans? What income have you got? Have you got any safety net? That sort of stuff.
I do think this whole like mortgage property game sometimes is a bit like the lottery. Like sometimes I feel like you can really win.
Yeah.
Like for example, you sell your property at the right time and you make a killing.
Yeah.
Or on the opposite side, you get a really good deal from a property that has depreciated and you've been able to win from. I just feel like it's very up and down.
I mean, there's still people that have got 1% and 2% rates.
Where?
Well, can
I get them?
They're the lucky ones because they
fixed
at the right time. I was thinking about this the other day. We don't have many clients who took a 10-year fixed or anything like that, because 10 years is a long time. But for people that maybe live out in the country that are set up, and they'll take that. I know the client who took a 2.22% 10-year fixed, and that was 2 or 3 years ago. And
he or she is laughing.
But if you have that foresight and you're comfortable and you're in that position, then great. Some people are lucky. At the moment, if you're the wrong side of the year, then you're getting hit.
Which I think a lot of us are.
Yeah.
Crazy. It's very scary, isn't it?
It is scary, but that's why you speak to a broker, and I say the gut feeling is a really important part.
I feel that.
You can look at the numbers, look at different scenarios with someone who's seen your scenario before, and then take a couple of nights to sleep on it, talk about it, think about it, and then decide, and then go with your gut.
Because I really think it can change your life in good and bad ways. Yeah. But it is life changing and it's so impactful, which is why I really wanted to get Dan on the podcast to talk about this stuff. So thank you for coming.
Thank you for having me.
As I said, I will put all of Dan's information everywhere. So can they just bombard?
Yeah. So
where can we find you?
Instagram. So if you be so kind to tag my Instagram, and then you can reach my work email and work WhatsApp and number, and or send me a DM, and I'll schedule a call with you and we'll go from there.
And the calls that you do with like Discovery, I'm guessing.
Absolute Discovery.
They're free of charge?
Yeah, absolutely. No obligation. So, and that's important. We do charge a fee, but it's only on completion. Okay. So it's a success fee. So if we don't do our job and you're not happy, we don't get paid. Okay. So we're working towards a shared goals. But no, absolutely no fee up front, no fee during, no obligation. Discovery, 15, 20 minutes initially. I'll follow up on email to summarise what we've spoken about, let you know next steps, and then we can go from there.
Really interesting. That's probably the 60th time I've said that word, but it is. So thanks so much for being here. Thank you for watching if you've made it to the end. Please like, share, comment, subscribe, whatever you can do to support the cause, and we'll be back soon with another episode. Ciao.